This is Jeb Hanwiger from GoldStockTrades.com, and I wanted to take a look today at the market action on the S&P 500 on July 23rd, 2010. Today was a big news day with news coming out of Europe stating that the banks were in a better condition than expected. People were glad that this was out of the worries of investors, and the indexes rallied. The S&P 500 did not manage to close above the 200-day moving average, and today's rally was not impressive to be able to call a trend reversal. So my bias is still negative. We are still in overbought conditions, and I expect that this area around 1120 to be the next area of resistance as it acted before. So that area, if it breaks out 112 on volume or 1120 on the S&P 500, then I would definitely change from a negative bias to a bullish bias. If it reverses at that 112 area, then that could be also a possible shorting point. Remember, bull markets don't end overnight. It's a process. Many people think that it's a bargain opportunity who are still bullish, and that process takes a while to play out before it becomes really an bearish market. And there's many attempts before a market begins to really deteriorate. The market here has not really had many attempts over the 200-day. We had the one attempt here, and we've not really significantly had another attempt. Usually before a bear market really ensues, there's about 3 or 4 rallies above the 200-day that fail. As we get towards that 3rd or 4th failure attempt, that's when you really begin to see indexes beginning to turn over. If I'm looking for a bullish change, I'm looking for a break at that 1120 on good volume. As you can see here, back in February, the index here had a major island reversal that day and closed at close to the upper range of the day on good volume. This ensued a several 2.5 month rally. Although it was on light volume, it was a 2.5 month rally, and then you began to see signs of distribution when the Europe data started coming out. Major selling 1, 2, 3, 4, 5 days before the flash crash of major distribution. That's a sign of a market topping. The indexes then rallied up to the 50-day, failed here, major volume sell-off, and it continued on. Rallies were on weak volume and continued to have major volume sell-offs to show that the price volume action was quite poor and the conditions were very bearish. So right now I am not out of my negative bias. I still think that the markets have a lot of work to do. The 1120 on the S&P is a major area. The overbought conditions are concerning me, and we will see how next week plays out. Please stay tuned to my blog at GoldStockTrades.com and sign up for my free newsletter where you'll receive timely market updates and specific stock recommendations that are ready to move. Thank you and have a great weekend.